Morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today is Thursday, the 25th of November, 2021. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments, and then I'll bring up the commentaries disclaimer. Hi, Michael. Good morning. Nice to have you on the webinar. Thank you very much for joining. All right, here's our market commentaries disclaimer. And just our references. So the charts will show you, it comes from FXCM Market Scope 2.0. I'm going to read from the CNBC Morning Note. I'm just going to bring up the DAX Weekly, and that's where we'll start sort of from the top down. So European stocks are expected to open higher today as investors continue to monitor the COVID crisis in the region and political developments in Germany. Investors will be digesting the latest news out of Germany, where a new coalition government deal between the Social Democrats, Greens, and Free Democrats was announced on Wednesday. The agreement will see Olaf Scholz, Germany's former finance minister, become Germany's new chancellor, with Angela Merkel leaving the post in early December. European investors continue to monitor the acute COVID crisis in the region. Amid rising infections that have prompted a handful of countries to introduce new COVID restrictions, Italy announced Wednesday that it will introduce tighter COVID measures, and Germany has narrowly avoided another lockdown, with the incoming coalition reportedly wanting to wait and see if tighter COVID passport rules help to alleviate rising cases there. Nonetheless, incoming German leader Olaf Scholz said Wednesday that vaccinations are to be made compulsory for targeted groups. Overnight in Asia Pacific, markets were mixed as investors reacted to the Bank of Korea's decision to raise its policy rate to 1%. The South Korean Central Bank's decision followed a similar move by the Reserve Bank of New Zealand on Wednesday. US markets are closed today for Thanksgiving and will close early on Friday in a shortened session. On the data front, a detailed picture of Germany's third quarter gross domestic product will be released. I think that's actually out. I saw it as 1.7, which was against the forecast of 1.8. I'll bring up Forex Factory to double check that. Let's just double check that. I think it just missed the forecast there. Yeah, 1.7 versus the 1.8. Okay, and the consumer climate composite index. So this is based on surveyed consumers. It's actually coming much worse than forecast. All right, so there's the data front, and then Thanksgiving today. Let's just take a look here whilst we're on the calendar. Okay, I don't think that's going to be. Well, this would be an interesting. This would be an interesting discussion here. Governor Bailey with Mohammed Al-Arian. Mohammed Al-Arian, he's now a lecturer. I can't recall which university, but he is. It's fairly. He's a hawk, and he was also one of the senior managers at PIMCO. Okay, but he's now, so Mohammed Al-Arian is terrific to listen to, and this discussion with Governor Bailey, I think will make for a really interesting, discussion. All right, let's put this down. Let's go through to the. The DAX Weekly, and the line studies that we drew in yesterday are the same. I don't see anything that has changed the weekly chart in the last 24 hours. We're still looking to see if there is a higher trough that is forming here, and if we do get the higher trough, then we want to see the higher peak come in. So that would be the scenario for a bullish trend. Let's just take a look at the zone analysis here. All right, so I'm going to have to adjust this and bring this down here. Okay, so the reason that this was drawn in yesterday, let's just recap, is that we're looking for our three conditions for a reference candle reversal. Clearly, that wasn't the case because this is not the lowest low. Yesterday's low is lower than the previous day's low, so this becomes the possible reference candle reversal. Now, this is a very interesting chart because you can see, okay, so the last 2 days, so if we go back to Tuesday, we had a huge sell down. We had a huge sell down at the low. At the low of this candle, the bears lose control because they can't take price down further. In fact, it's the bulls that take over and they push price up, and we end one of our lows on Tuesday. The test came yesterday to see if the bullish follow through was set to continue, and alas, it wasn't. All right, so what we have then is a very similar structure. Bears pushing down to the low, promptly losing control at the low, and then bulls taking over. So there is a tussle going on here. Every time the bears are at their strongest, they run into exhaustion, and the bulls take over. However, there is now a serious a seriousness that is emerging in this daily chart, in that we have come into this we're pushing into this zone 3, which is our bearish area. It's a weak area. So there is now almost a if we see this as a potential higher trough that is forming, now's the time for the bulls to really show their mettle, right? They've got to come and follow through from their I guess the control that they took from the bears yesterday. In other words, okay, we need to see this reference candle reversal. If we get further into zone 3, well, that's starting to become an issue then, because the zone 3, if we stay in zone 3, the correction is set to continue, and I call it a correction until proven otherwise. The reason I choose to call it a correction is because this peak over here, this is all-time highs. It's very difficult for me to not see this as a normal correction in an uptrend, because the fact of the matter is this was such a dominant swing here, pushing us to all-time highs. Where it would become much more difficult to make that case is when we have a weekly lower peak. If we have a weekly lower peak, not even a lower trough, just a lower peak, well, that's weakness starting to seep in right there. So we don't have that, and the longer term primary trend to me looks okay. Where the concerns coming in is now the bulls need to show us what they got, and the way they the way they'll do that is they'll need to take price and close above yesterday's high, because if they close above yesterday's high, then we've got the reversal potentially taking place. Let me just make that clearer. The reversal from the correction, so the resumption of the uptrend. So we want to see very carefully how the DAX performs. The GDP miss, the lower consumer numbers, that's not a great start to the day, is it? Overnight, I did see NASDAQ was up, so I actually traded NASDAQ up yesterday. So maybe that kind of follows through and builds a bit of a momentum on the risk side of the market. Let's just go down to the hourly and have a look to see how the hourly, in terms of the timing, is looking. All right, let's just move this over here. I'm just reading a comment from Peter. Is it when the sellers run out of sellers and stop shorting and become buyers to get out? So I'm just thinking the best way to answer that. I think the way that I'd like to look at it, Peter, and again, it's it's opinion, is that this is a very strong swing over here. Okay, this is a very strong swing over here. If you were participating in that swing and you got in sort of quite close to the start of it, well, by the time you reach the sort of apex, well, you're holding nice profits. What you could choose to do is to start banking those profits, because, well, one may be thinking, well, how long is this set to continue? How long is this set to continue? So I'm not convinced there's all-out shorting. Certainly there is a short side to the market that is participating. However, I think a lot of the selling pressure is, in my opinion, to be attributed to banking of profits. And I think once the portfolio managers feel that the DAX has pulled back far enough, it's now representing value once again, it's time to consider getting in. And I think that's what's happening here. So yes, there certainly would be short sellers in this leg here, but it's, in my opinion, not really the story. I think the story is the banking of profit, and that is, I think it's near sort of completion. We have got a strong pullback here to, depending where you start your fib count, right? You've got 38%. We can actually draw an overlap here. So you can see that this 38% kind of lines up with a 50%, assuming that the portfolio managers started here, or the portfolio started here. Some may even start here. So depending where you are, you've kind of got this zone here where there is a fair pullback. So that's my reading of it at the moment. I don't think that there is a distinct push to short the market. And if there is, I think that's a very dangerous approach to the market at this stage, because let's just bring in the stochastic on the weekly. Because the stochastics moving into 80. In fact, this is the stochastic here, that's the percent K. The percent D is your slowing factor, right? So the blue line is your percent K. So in all respects, the stochastic is in that 80 area. In other words, right now, as we're having this discussion, there is a positive momentum. Now, I don't know how long we're going to hold that 80 level. Clearly, I want it to be there and maintain the momentum. But if you're shorting into momentum, gee, that's a dangerous game. That's a dangerous game. So that's why I don't feel that's the story. Meaning the risk. Yeah, got you. So, but we'll carry on. We'll carry on monitoring this. Again, I think the big deal will be if we come in with a lower peak here, because that's going to change the narrative. Okay. So let's just go back to the hourly, and the cash market is just about to open, but you can see that this leg over here is quite problematic for a swing trader, because how do we get in this swing here? The short-term momentum, short-term swing, I beg your pardon, is down, but that is within a broader primary uptrend. So let's go to this one here. The zones here we're going to have to watch very carefully. Really, if the bulls fail to push out of this zone 3, then we're going to have to consider why that is. So we've got this line over here, what we call the line in the sand, and I now want to assess the market based on whether the bulls can push through that. If we go back to our hourly, all right, let's just add a fib here. So we'll just use this as our start for the fib. So this swing over here, just this swing from there to there, but that's pulled back 62%. It pulled back to 60, the S1. That's where the market found support. And now what we're going to look for is the stochastic staying in the 80. If the stochastic can stay in the 80, well, then I would suggest that the central pivot holds as the support, and the EMAs start moving back in that northeasterly. Now this is the big deal here. Okay, if the stochastic falls out of the 80, the bulls are still struggling. Okay? The short-term bulls still are struggling, and then the S1 level becomes sort of interest, and then well, we've got to just keep an eye on it, because once we start staying in zone 3, well, that's building the pressure down, and that's going to change the analysis considerably. So it's a little difficult to get a bead. My preference is we're still seeing the higher trough here. We just need the, sorry, not that one. We just need this reference candle to chart, and if it doesn't, well, that's a big question mark then. All right. Any questions? Any questions? Please go ahead and type those in. I'm going to try and make the US Open again. I can't promise. I haven't cancelled it yet. I do have a meeting immediately before, but if you get the invitation, then it's on. So just keep an eye on your inbox. I'll try my best to make it happen today. All right, let's conclude at this point, and hopefully we chat a bit later in the day. Thanks very much, guys.